This is how smart investors make killer profits in the stock market. And trust me, anyone can pull this off. Watch closely because many investors got their big break from using just this one strategy, one that could turn your future investments into massive profits. But here's the catch, if you don't play right, all the potential, poof! So what separates a great investment from a bad one? What do the most successful investors know that we don't? It all comes down to these 4 simple steps, and in this video, I'll walk you through them all. The first step is one that's by far the most important, and yet also the most overlooked. You could spend hours of researching stocks, watching financial news, and tracking countless number of charts. But if you don't know what type of investor you are setting yourself up for failure. Which is why the first step is to identify your approach. Are you an investor or are you a trader? Because if you say I'm an investor, but the moment the market dips, you're out there panic selling, that's not investing, that's stress trading. Investing is buying great companies and holding them for long periods of time. Warren Buffett has held Coca-Cola stock since 1988. Trading, on the other hand, is about short-term buying and selling, trying to time the market like Wall Street traders.
Today it is trading at 36.5. Mr. Butt.
So pick your side. Are you in for the long haul or are you playing the short game? Because your entire strategy depends on that one decision. Step 2. Consistently pick winning stocks. If you pick more bad stocks than good, how can you expect to make killer profits? But the problem is that most people buy stocks purely based on hype. Just because some random guy on Twitter says it's going to the moon, they buy it. And then when the stock starts to drop, suddenly they panic sell, then start crying in the corner and swear never to invest again. Now that's a losing strategy. So here's how to consistently pick winning stocks. Rule 1. Buy the business, not the ticker symbol. Just because a stock looks good on the news doesn't mean it will make you money. Take Nike for example, the biggest name in athletic shoes and a dominant force in sports apparel. Sounds like a stock you want to own, right? But what if I told you it's down over 60% in recent years? So what if it has a great brand with endless competition and no real niche? Staying ahead is a brutal game. That's why when analyzing a business, you need to dig deeper, understand how it makes money, know its competitors, and ask yourself, does this company have a real edge? Or is it riding on a brand hype? Rule 2. Check for profitability. If a company isn't making money, you are just gambling, not investing. There's no telling when or if you ever turn profitable. And let's be real, both you and me don't have the time or money to wait and find out. Just look at Beyond Meat, once hyped as a revolution in the meat aisle, but now fighting for survival. Demand's shrinking, profitability is shrinking, and the stock crashed over 98%. That's why always check for profitability before it's too late. Rule 3. Avoid hype. If everyone's talking about it, you're probably too late to the party. Take Big Bear AI as an example. Too late to jump aboard, said an investor on February 9. That day the stock was trading at $8.59. Sure, it shot up nearly 20% in just 4 days. But then, a brutal 68% crash. Think about it, if something were a sure win, wouldn't big investors have already cashed in before you even heard about it? Step 3. When to enter and exit. Even if you could pick the best stocks in the world, you can still lose money if you don't understand this one key principle. Consistency beats timing. Most people obsess over timing the perfect entry. They wait and they wait only to watch the market climb higher without them. Or worse, they try to sell at the highest price only to see the stock drop even more. So instead of stressing over predicting the market tops and bottoms, the best investors use dollar cost averaging. This means investing small amounts over time, preferably monthly, no matter what the market is doing. Because if you go all in at the peak and the market drops, you're in for a very painful ride. But dollar cost averaging helps you avoid that by spreading out your investments so you don't risk everything on a single bad move. Step 4. Mastering your mindset. The stock market isn't about intelligence, but about psychology. When the stock market dips, most people panic and sell, fearing they'll lose it all. But the best investors, they buy more at a discounted price, knowing the price will eventually rebound. And when the stock skyrocket, most people get hit with FOMO, rushing in to buy. For the best investors, wait for the right opportunity. Here's an image that perfectly illustrates this phenomenon. Everyone wants to buy Palantir at $125, but nobody wants to buy it at $65. Why? I mean, I too used to be like that. Once you learn how to control your emotions, you will start making killer profits. Simple as that. Alright, now you got a strategy? Here's how to get started with investing today. No excuses. Step 1. Open a brokerage account. There's Fidelity, Charles Schwab, Interactive Broker, Tiger, and Moomoo. Pick one that suits you. But don't get too caught up stressing over which the best one, because your investment strategy matters way more. Step 2. Buy your winning stocks using the 4 steps we just covered. If you're not sure where to start, check out my buy or sell playlist, where I provide 3-minute stock pitches covering everything from the company's outlook to financials, valuation, technical analysis, and price target. And step 3. Set up automatic investments. Invest every month and avoid letting your money slip away on impulse purchases. Oops. And that's it. If you stick to this strategy and stay consistent, you will be ahead of 99% of investors. And one day, you might just wake up financially free. Not from luck, not from hype, but because you made smart, calculated moves one step at a time. If this video helped you out, smash the like button, hit subscribe, and drop a comment below. What's the first stock you plan to buy? If you are still unsure, tell me your investment style and let's build your portfolio together. Until then, see you in the next video.